We live in a world, folks, where basically pixelated rocks are selling for $500,000. Stocks continually hit all-time highs, and crypto loves to fluctuate 40% on a biweekly basis, so it seems these days. So I thought it would be an incredibly fun little opportunity. Well, I have a second here, making flipping stuff around like there's no tomorrow to do a fun little Q&A about anything you guys want to talk about. We're starting to run crypto mines, talk real estate, I mean stock portfolio. There's so much in this market to get excited about. In fact, I'm kind of just quoting a meme, really. I don't know if you guys can see it. I'm going to basically I'm going to set up StreamYard so I can do a little sharing the screen, because it's the only thing I'm lacking right now. I got good internet finally. We're making so much money hand over fist. It seems ridiculous that I've got this kind of faded camera and no screen share for you guys, but still, nonetheless, I'm sure my rambling can offer hopefully some incredible insights. So we'll kick it off here with Patrick. Hello, I was wondering about your thoughts in investing into the semiconductor uh, business, I presume, and would you ever consider building a position into it, such as Nvidia? I don't know enough about semiconductors. It's so out of my wheelhouse that I just never did. I worked at a computer store. I wish I bought Nvidia years ago and I knew more about it, but I just don't know enough. Other than I'm glad that Apple is, vertically integrating. Tesla's vertically integrating chip. It seems to be the future of, if you're not vertically integrating your software and your tech, that you're screwed. I mean, that's the apparent world that we live in. Like when I look at automakers, when I look at game producers, when you look at Microsoft and Xbox, and it's like they're all in supply constraints, and they've all realized that I don't know what this is going to do for Nvidia, but like I said, I am so disconnected from how that whole world kind of logistically works together, that it just seems apparent that some of the largest people that were buying chips are shifting into just building them themselves. So that could be a red flag. I don't know what could be what. I just clearly Nvidia's always sold out. So I'll leave that one to you, Patrick. If you know anything, please shoot a little comment here. I'm sure it would help. When Kyle's jumping on the TQQ train, I don't know. I I'm a little simpler than that. I'm not too big, because you got to remember, like TQQQ is what is it, like a closed end options fund where basically every single day it resets. So the returns are relatively interesting the way they're calculated, but it's an incredible opportunity. I mean, it just represents the Nasdaq 100 QQQ ETF, and honestly, it's if you want to make 3 times the amount of money the Nasdaq's going to make, it's just, I don't know. I'm happy with my QQQs and my VOOs and my individual stocks. Maybe one day, but right now I'm not that risk adverse. I feel like that's something that I would overanalyze on a day by day basis. Um, Hey Kyle, thoughts on proposed liberal tax hike? Does it make you more or less likely to invest in the Canadian banks? Haven't looked into that either. The Canadian tax, so long as it's not corporate tax hiking, it'd be neat to see how that reflects onto banks. But we're also living in a time where interest rates are at record lows, so I wouldn't be surprised if they're going to do tax hikes right when they start raising interest rates. Because I mean, this is the problem with real estate, right? Is everyone's like, "Oh, you got to get in, you got to get in, greatest time in history." Best time to buy a house, just keeps going up. It's like, yeah, but we've also been in a decade where interest rates have done nothing but gone down. We hit rock bottoms. For every 1%, usually interest goes up, real estate comes down about 5 to 10%. Whether that actually happens the way it may happen, I doubt it, but probably to reiterate some of the real estate stuff, because this has been an interesting conversation too. When you look at, I've been listening to people like Grant Cardone. I know you guys might have mixed opinions about some of these real estate moguls, but they've all kind of come to this conclusion that I find relatively fascinating. Look into the future, which is that myself, millennials, we aren't the most real estate inclined people. I mean, we don't really want to manage real estate. We don't really want to buy real estate. It seems to be a massive trend where, just who wants to deal with it, right? Like it's not like you just buy real estate and it's immediately passive. There's a way more upfront work, usually equal to higher returns. Be a massive trend where, just who wants to deal with it, right? Like it's not like you just buy real estate and it's immediately passive. There's a way more upfront work, usually equal to higher returns, that are either looking to buy real estate or they own real estate and they're just still accumulating and doing what they can with it. But the boomers are on their way out. And when the boomers leave the real estate market, there's going to be, just I think in the US alone, I think there's over 18 million something homes, probably a lot more than that, I would imagine. But there's this speculation that when boomers start moving on, that the millennials will be inheriting this real estate but not wanting to deal with it. They're either just going to hold or sell, and it's going to lead to this exodus in the real estate market. Because again, the boomers leave, we millennials now have that option of real estate generationally inherited, and we what do we want to manage? I don't want to manage my parents' farm. I'll be a guy that sells it. I want comfortable living, right? So if that's like the mentality, it's going to lead into maybe in the next 10 or 20 years where we see this mass exodus from the real estate market, thanks to the boomers, unfortunately passing away and millennials not wanting to deal with it. So I'm by no means a rush to buy real estate, but I think people are just a little too gung ho about how fast it goes up and how easy the money's been. And you should always be fearful when money is really easy to get your hands on. And I mean, the banks are even getting worried, right? Like their stress tests are incredible to get real estate right now. Trudeau can tax the banks, but they're still restrict on raising dividends. Crazy, yeah. I mean, those are issues for sure. Are you going to be in a rocket lab? Rocket Lab's a fun one, guys. I'm really disappointed. My worst stock trade recently in the last year had to have been Momentous, which actually finally merged a little while ago. And I feel bad because Momentous has this incredible team. You know, they got a lot of some astronauts on that team, Chris Hatfield, and I was just really disappointed. I honestly thought that Momentous would have been one of the most profitable, quickest to profitability play to space. Because the problem with space right now is if you're rich enough, you could have bought into SpaceX because they just did their last funding round in March. And if you were accredited, you could have bought into it at a $50 billion valuation, which, oh my God, they're the opportunity of a lifetime. I think if you got a 20-year time horizon, SpaceX could potentially be, if it ever went public, would very likely be one of the largest companies in the world already. I mean, the Musk effect, I'm sure, as people are aware. But unfortunately, the pure play to space, whether, and I mean pure play, I'm not talking about like Lockheed Martin, because then you're getting kind of a diversified assets of income from many different facets, right? But I want those pure plays, like your Virgin Galactics, your Rocket Labs. But those things I just don't. I like Rocket Labs a lot. They're vertically integrated. I think their business model is incredible. I just really, really makes me cry up a little bit about how great the business model was for Momentous before that Russian espionage shit was going on, and unfortunately the CEO got is what it is, right? But I like Rocket Labs. If you want risk and you want space, I mean, heck, it's a pure play that I wouldn't be surprised if it picks up in ETFs because I mean, there's like what, three pure play space companies right now. Thoughts on any party proposal on housing so far? I'm not sure what you mean by that, but I'm not looking at housing really. Lots of people, I would say, have large presumptions that it's just a graphics card producer, but it has branched out into services and being more involved in AI, VR, and yeah, no, for sure. Nvidia, like a lot of these big tech giants, are obviously like super diversified. I'm just, like I said, it's not my wheelhouse to just be throwing out random stuff. Like I know what I'm talking about in that sector. I should do some research on it. I mean, we're getting into crypto mining, and Nvidia cards are a rarity to come by, man. Like we have direct access to the suppliers, and even the suppliers do not want to sell us individual cards. What they're doing, actually, this is hilarious. Honestly, like if you don't think crypto mining is that big, talk to any chip supplier because you're never going to buy them directly from Nvidia. You're going to have to do some third-party supplier. And luckily, my buddy owns a computer store, so he gets cost because they get different cost structures because obviously they buy it and then it goes to retail. And the suppliers do not want us buying Nvidia cards individually. We have to buy them in bulk packaging. So you have to buy a GPU. Usually it's coming with the power supply, and you're spending like an extra 1,000 more than you'd want to. But this is what they're trying to do to prevent people from just buying and flipping cards. So it's definitely a challenge. But I mean, how long does this last? That's my question, right? And that's also a question to how profitable Bitcoin mining will be, as basically for as long as chips are in shortage. I mean, and China's kind of shut them down, and people can't get their hands on them. I mean, what does that do for Xbox, right? I'm curious to see what Microsoft is going to be doing on their next iteration of product sales because they're getting slammed. I mean, even trying to buy an Xbox, right? Like that's been a nightmare for gamers. Everyone's trying to go PC, and luckily, at least you can still get the packages. There are availability on that end of it. Thoughts on any? What else we got here? Just met the federal party proposal. I haven't looked into any of that. I know a lot of you guys seem pretty interested in the Canadian government tax implications, but I just need to pay attention to the corporate tax. I really don't care about how the government taxes banks or anything. Yeah, it might affect individual investments, but personally, for my state of business, I just want to make sure they don't raise the corporate tax rate because right now it is easy to get rich in Canada. It is expensive to live here, but there is a reason crypto miners from China are coming here. There's a reason big business likes Canada. I mean, what's the corporate tax rate in the US? I think even in the best states, it's still like 20%. Like it's still pretty high. In Canada, it's 3%. I mean, if you can, and on the first $500,000 on that note, I mean, could you imagine making $500,000 and only paying a 3% tax rate? I mean, obviously, there's things that you have to do to vary those kind of tax rates. I mean, you can't pay yourself $500,000, but if you're good at managing a corporation, you know how to bleed those corporate expenses into your personal expenses without crossing that gray line too much, and you got a good accountant, things get juicy, baby, real quick. And I'm glad that I caught on to this at a really good time in my career. As a Canadian, do we pay withholding tax on U.S. capital gains on stocks? Not capital gains. Um, I honestly, the one of the most confusing tax rates, and this is good for U.S. viewers as well, when it comes to the corp or the withholding tax over the border tax on Canada and the U.S., you pay it no matter on both sides. But I don't understand how certain companies get exempt from that, because I used to think it was almost every U.S. company, but I look at my income and it's not. I don't pay any withholding on my utilities, like Southern Company coming over the border. I don't pay it on. I didn't pay it on MO when I was holding MO, no withholding tax there, unless they were just no, there was no withholding tax. I was so confused because I only pay withholding tax on REITs, the real estate investment trusts, which I'm fine with because I'm not that heavily exposed to U.S. REITs, but there's no withholding on capital gains or anything like that. So I always kind of recommend that if you're investing in, say, a TFSA or RSP or something like that, it's really good to hold some U.S. companies that you can take capital gains on. But even in Canada, right, like even in regular Canadian brokerage accounts, you can literally just buy a Facebook stock, pay no dividend tax, no income tax or anything. You can sell it and you'll pay less tax than you would on it, say, regular dividend income, because the capital gains rate in Canada is phenomenal. I mean, I think in the US, you guys pay what? You pay your regular, what's the capital gains rate? I think you pay like basic income tax on the full capital gain. Whereas in Canada, 50% of your cap gains are 100% tax free. So you buy Facebook stock for 50 grand, you sell it for 50, you make 100,000, you sell it for 50K profit, you only pay tax on 25,000 of those profitable taxable gains. And those cap gains are only at your marginal income rate. So it's like, you're really not paying much, especially if it's in a corporation. The proposed, did you get a hand tattoo? No, no, no. Just weddings. This is just like Mendi, Hannah, for any of you guys that are like Muslim, Indian. I mean, you'll know what this stuff is. Actually, I had meetings today and I was like doing this and I was like, oh, damn, I hope doesn't look too unprofessional. Oh man, these meetings today, God, it's so weird. When you work for yourself, bro, you work every weekend of your life. I had a really, really good meeting today. I think I just closed one of the biggest contracts I may have ever closed. It's pretty dope. I heard talking about tripling the Canadian population by 2050. What do you think about portfolio positions? So look, this is what I say about Canada all the time. Now, population density is going to be slowing down by 2023. The reason that Canada has been so insanely profitable for infrastructure, this is why I only hold Canadian banks and primarily utilities and REITs. Canada is one of the most open to foreign people coming in than any country that exists really right now, but that's based on policy that's been implemented years ago. Trudeau's family, Trudeau's been primary provider of this, and I love it. I'm not against any of this at all. I think Canada's a wonderful place. I think we need more people. I think it offers more prosperity. Plus, the people we bring over obviously have to meet some kind of like headlines here. Like usually we're bringing in people with money, people that are educated, people with like career paths, and those people come in and they stimulate the economy. There's a reason real estate's going up. It's not me and you buying a house for 1.8 million. I guarantee it ain't me or you, but I guarantee that money's coming from somewhere. And anyways, the Canadian government's going to allow, I think, another 1.8 million people by 2023, and then that contract ends. Whether they renew a foreign policy contract or not, I don't know. But this is leading to an insanely robust economy when it comes to the utilities, because everyone needs housing, hydro, they need telecom. I mean, Canada is such an easier population to understand than, say, the US. That's 400 million people large. Understanding, say, AT&T is damn near impossible. Management sucks. Whereas in Canada, I feel like even if management sucks, they still can lean into this crazy influx of people that just need something. And luckily, because Canada isn't as big as the US, there's a lot less competition. I mean, really, what do we have? We have like 5 banks, a handful of telecom companies. I mean, most of the utility providers are conglomerated at this point. So like it's really expected to get really decent dividend returns, and it's calculatable. In the US, I don't know how you calculate that stuff on infrastructure. It becomes a little more challenging, right? But yeah, so I mean, I love the Canadian economy. It's a shame because I still like the U.S. stocks more. At the end of the day, it's business, right? Like Facebook, Apple, like the conglomeracy of those companies expand much beyond just the U.S. So I mean, that global exposure, the fact that the internet hasn't reached max saturation, that's the key to the. Like this is like the funnest thing that you try and play around in your head, right? Like when does Google stop growing? When does Apple stop selling brand new record iPhone sales? And I think it really comes down to when the entire world reaches max saturation of internet consumption, which I'm really curious to when that happens and at what point, because I think 30 or 40% of the entire world's population still doesn't have access to internet. I mean, thanks to Starlink, a lot of that's changing. I notice even out where I live, the internet has been getting a lot better. Bell has been upping their infrastructure, and all of that leads to obviously more spending, more usage on Facebook, social media platforms, and so on and so forth. So that leads me to a really bullish sentiment on tech stocks still. For how long, who knows? That's anyone's game. Definitely going to buy more utilities over the near short term, especially AQN Southern Company. I love Southern Company a lot. AQN's great. I was just having a discussion with my buddy. Kid I grew up with. I haven't seen him in like 10 years, popped in a little while ago, and he's really into stocks, great portfolio, and he really likes nuclear energy. And this is probably one of the most underrated sectors that I don't hear about on CNBC. I don't hear about it on any forums. If you want to see something really interesting, go look at the commodity price for uranium, because uranium has been having a wicked comeback, and it has less carbon footprint than solar does. It has 1,000 times more energy density than solar does, and China is doubling down on it. I mean, typically with renewables, we keep hearing about natural gas in a lot of these foreign countries. Natural gas is great. I mean, Colombia, we have a huge sponsor, and it's probably going to be one of the largest natural gas suppliers in Colombia. I think GasX as the ticker, GASX, and like there's a lot of countries leaning in that direction for their power consumption to bring down emissions. But at the end of the day, man, you can't debate nuclear, and the fact that there's innovation going on in the waste, because they're figuring out how to crystallize nuclear waste, and it still generates heat, and they're confident if they can just control the radioactivity of it, that you could easily just use it as a battery. Because I mean, if it produces heat, it can easily produce power. So that's another interesting factor. We also have Rolls-Royce and a few other companies working on micro reactors that are very advantageous. They're smaller. They build them underground, very safe, electromagnetic shutoff valve. So if the power goes out, there's no chance of nuclear meltdowns. I'm very bullish on that sector, though I don't have much exposure except for Southern Company, which I think owns 6 nuclear reactors. Insanely expensive to start, but my God, you want to talk about secure cash flow? Imagine building something that's government contracted that you can't shut off for like 60 years. I mean, literally, like once those reactors start, you can't just move it. like it's literally just like, boom, this has got to be here now until it cools down enough, and we got all the waste and shit, and we'll get rid of it and bury it somewhere where that's the end impact, right? Like, how do you deal with the half life of like a 2,000-year radioactive material? Got to run. Thanks for live stream. No problem, Shamir. I know it's an off day on a Saturday. I'm just in the middle of running so much work right now that I'm like, hey, I got 20 minutes, an hour here. I could probably just shoot off a quick stream. There's the possibility of banks going absolute in the future, and big tech companies become liquidity providers. So with banks, I think the biggest threat to banks, in my opinion, was blockchain technology. But now I'm starting to realize, with the stupidity of people, that there's no way blockchain will ever work independently. I mean, to some degree, yeah, crypto can work independently, but it's quite apparent that it'll have to somehow merge with banks. Banks, I mean, closing houses. Banks, what do you got? Like Citadel do all the closing houses. Terrible system, by the way. I mean, it takes 3 days to close a stock deal. I mean, when you hit that sell button, you understand that if your bank lets you immediately buy a stock after you sell a stock, that's actually like forefronted money. I mean, usually there's a settlement date. And you'll notice when you sell a stock, it usually takes 3 days to settle before you can actually pull the cash out. And typically, what banks will do is they'll let you day trade, right? So you could day trade in and out all the time, and they just kind of add up, minus this, that, and the other. And then they actually take 3 days to close all those trades that you've actually done. And it's terribly clunky. I'm surprised that it's been kind of going under the radar for so long. So I really feel like the blockchain, if you guys like, so I mean, when you look at banks, right, like it all works off a ledger at the end of the day. Like a ledger is just a piece of paper that every time a transaction happens, it goes down on the ledger. That's what gets reported to the government. That's how the back end of the bank works. Crypto works exactly the same way, but it's so much more efficient. And like I said, I'm not trying to like just pump crypto or anything like that here. I'm just saying it's a relatively banks and crypto work the same way. I know it's hard for people to figure that out, but now that the fact that you see it all, okay, so this is cool too. I think this is crazy cool because I've been reading a lot into like Coinbase getting hacked, and this is super dangerous. And I think the stupidity of people is going to get worse and worse, and the amount of crypto scams going on are going to definitely up the regulatory issues around it. But I'm sure you've read the articles, right? Like people's phones are getting hacked, and because this is so funny, by the way, because Coinbase, I use ShakePay, all these like crypto trading platforms, they're highly regulated. Like you have to give them your ID, you have to sign up to accounts, you have to verify those accounts, you have to do like backup security stuff with your phone. And what people are doing is they're hacking your phone. They're redirecting your phone number to their hacker's number, and then they'll call Coinbase, or they'll go on your Coinbase account and they'll set up, I need to change my password. And people use their phones like I do as a backup to reset your password, because that's when you get sent the verification code to your phone, right? And then they hack into the account, steal all the money, and because it's third party based, Coinbase won't deal with it. They're like, it's your own stupidity. I'm sorry, you're dumb. So that's the funny thing about not having like a legitimate wallet on crypto, because if you don't do crypto legitimately, even using the dedicated regulated platforms, they still come with an absurd amount of risk, which I think is funny as hell. Your thoughts on the Very or TAT, which is better upside for? I think Very has a better foundational business. Very good company, has proven track record. They've proven their product. They're just in scaling. They're just in marketing, and that's probably something that'll likely continue to offer some growth on their bottom line for the foreseeable future. Whereas TAT, I love TAT a lot. It's been a sponsor of ours. Great company, but when you look at the balance sheet, what you really want to pay attention to is companies that are spending millions of dollars on marketing and advertising. You want to ask yourself why, and is it going to actually be beneficial to the company? Because TAT's in this phase right now, and I work with a lot of companies that are in a similar phase where basically they finally got their product kind of proven out. They've got the logistics, the farming, the material manufacturing down. And now they kind of get into this mode where they're like, okay, people like the product. So how do we get it out to the people? Well, we need to finish scaling logistics. We need to go international. We need to get into as many stores as possible. And I think there's another company that, what was it called? It was the mushroom tea company. I did as well. Seemed very similar to TAT to that reason, because they're doing everything they can to just prove that there's going to be bottom line revenue for this product. And it's just, I think this year is pivotal for them. So TAT, more risk. I think there's more upside to TAT than the Very Good company, but TAT has to prove that out. I think in the next year, TAT, if it proves exponential growth off what it's doing and the crazy ad spends, I mean, you're talking about so much money that if things don't go the right way, it could literally bankrupt the business. I mean, TAT is spending millions of dollars on marketing, and I know people that actually get that marketing and how much they're getting paid, and it is in the hundreds of thousands of dollars. I don't get that. I wish I got that, but I don't get that. But ideally, I think it's smart because with TAT, you're also getting the two sides of marketing, because they spend a lot of it on stock promotion. But while they promote the stock, they're also basically promoting the product at the same time. So it's kind of like a dual promotion period for them. But yeah, what else you guys got for questions? What's the best way to invest in commodities like aluminum, nickel, or cobalt? So look, that's a tough question. I don't invest, I think, directly into the commodities themselves, but this is probably the most advantageous time to be buying direct exploration companies. I mean, the exploration market in precious metals, even uranium, you go look at the commodity prices across the board for the last decade, and it's been a nightmare. I mean, you guys know the gold prices. They went down and flatlined. They bankrupted most people that were into gold exploration. And luckily, anybody that was able to survive that and accumulate more exploration sites, they're rich. I mean, they made bank, and that's not really going to change. I mean, it's quite clear that the trajectory things are moving on, because you look at lithium, graphite, all these things used in batteries. The largest graphite producer is in China, and I think they make up for almost 50% of the global lithium in graphene kind of supply. And they're stating by 2025 there's going to be mass shortages. And I mean, Tesla is a prime example of this, right? Like Tesla's literally debating on whether their battery manufacturing has become what Elon calls is like a chemical factory, because like they're trying to find new ways to make batteries, even though they're not more as efficient. I think Tesla's actually working on iron diode batteries, and they're not nearly as efficient, but they do the job. And I think that company primarily recognizes the shortage. I mean, their power walls are 2 years sold out because they can't build batteries fast enough. So I mean, everyone thought that Tesla would be a company that would be like selling their batteries like Samsung does or something. But clearly, I think everyone recognizes what's happening, and GM bought into a lithium mine, which is good on them. I honestly think that's going to be one of the biggest destructors to most companies that aren't vertically integrated is the shortages. And again, look at even Nvidia chips. I mean, all that has to come from raw material, and they can't mine it fast enough. They can't produce enough of them quick enough. So I mean, how long does those supply constraints last? I mean, for as long as we're stuck looking for minerals on Earth, I mean, we know these minerals are prevalent in space, and they're in much better quantity per ton. Um, I mean, the moon. I can't remember what the mineral is called on the moon. There's a material that is like 1,000 times more prevalent on Earth, and actually, they're using that material to test fusion energy, which fusion's obviously speculative as hell. But on Earth, to mine that same material, you're getting like 0.milligrams per ton. Like it's insane how hard it is to get on Earth. But on the moon, they're like shit. Like there's a ton of it, and it's highly concentrated in comparison. So I think once we get into space exploration in the next 20 years will probably be when we start seeing less supply constraints when it comes to mineral, because the world's exploding. And unless we find more prevalent just minerals, metals, it's going to be a continued problem, I think. Are you on the DeFi platform? You can deposit your money as collateral and borrow and deposit that borrowed amount as more collateral and borrow. Yeah, no, I'm not taking it to that level yet. I use a company called Lendin that does similar stuff to DeFi or BlockFi. Let's say there are all these different platforms do roughly the same thing. They all work through roughly Gemini. Actually, I've gone really deep down the rabbit hole on crypto loaning because obviously I'm not going to loan crypto unless I know who that money is going to. And unfortunately, Gemini does not disclose the money they loan crypto to. But the interesting thing about who they loan it to is I listen to a lot of that CEO's interviews because I'm like, I'm not going to just be lending money, and crypto is just money to people unless I know for sure that they're not going to be like bankrupting themselves. And luckily, Gemini claims that most of their clients are AAA rated, coming from the cloud computing, the tech sector, and they're just people that are looking to add 2% of Bitcoin to their balance sheet. They don't want to own it directly because, I mean, if it's going up 200% a year on average, and you can loan it out for 12%, let's say, and then you make 6% as the person loaning the coins. I mean, it's a pretty sufficient system, which is really interesting to me. I haven't done it yet. I am signed up to Ledin, is like the Canadian version that works through Gemini. You can accumulate a lot starting from 0.5 Bitcoin to even 1.2 Bitcoin and Bolt. So look, for me personally, and again, I get a lot of you might not be into crypto, but to me, the two facets that I only want to focus on right now is owning it directly, which I can probably show you my wallet, because I just to hold it for leverage to me as an emergency fund is more secure than cash. Because I can go to any country in the world, immediately convert it to any currency at the lowest fee possible. So I got my wallet sitting at about what $6,600. I've got literally 1/10 of a Bitcoin. But on the other spectrum of it, I want to own the printer, because this is the only time in history where you can literally own the money printer. And right now it's profitable. We set up a test mining kit, and it's doing surprisingly well for our first little test. Last question. Do you think Alibaba has bottomed out? I wish it bottoms out. I got it for my mother. Nothing funner than buying stocks for your parents that go down. I have no exposure to Baba. I'm kind of on the fence. It's like one of those little angel and demon things where it's like you constantly kind of yammering with the valuation metrics in your head, whether it's a good buy or not. I think for long-term play, the value is absurd. But for people that are a little older, it probably wasn't the best buy for my mom. So we're just going to wait and watch it probably for the next year. And if it decides to rebound, I'll probably exit the position because they just don't need that kind of volatility in their portfolio. But I do think Baba is one of the most complicated investments to wrap your head around right now because the valuations are so insane that if the rhetoric ever changes, which I think it will, I don't think China wants to destroy these companies. I really don't. And when you watch people that live in China that understand the investment realm, like they're so bullish on these companies, it's ridiculous. And I mean, you have the likes of Ray Dalio, right? Like Ray Dalio actually goes to China like a dozen times a year. So I honestly I have a hard time with it, but I think if you want some risk reward with that's about as good as it's going to get because right now the only real risk is the U.S. delisting it from the New York Stock Exchange, which isn't a big deal because then it just becomes OTC market. I mean, if China ever, you really think China wants to dump off foreign income by just destroying the ADR market? I mean, they didn't really want. I don't want to go down this. This is a long conversation and it's complicated. The rabbit hole of China not letting people buy into those companies leading to this ADR market that comes from like Sweden accounts, like it's very convoluted, but it's a rabbit hole that I recommend that if you guys are interested in those kind of investments, you dig down through and kind of come to your own conclusion, because there is risk, but the reward is substantial. Because there's no better deal in the market. Baba does double the inventory of Amazon, and they're trading like they're broke. Like, it's ridiculous. These companies loading on gold bars. Yeah, I noticed really interesting. Was it Palantir? I think Palantir bought like $50 million worth of gold, which I found really interesting. Seems odd. And the craziest thing about Palantir, actually, this was like the wildest thing I think I came across in a while. I didn't dive down too deep into the rabbit hole of it all, but isn't it really interesting that a company like Palantir that is so directly involved in government programming globally, that can't disclose what they do with the government, are now buying a crap ton of gold? It's an interesting thing going on there. I'm bullish on gold. I mean, I talk a lot about gold stocks. I own gold myself. I own physical metals as well as part of my emergency fund next to Bitcoin. I keep some percentage allocation there because, again, at any time the entire economy could collapse for God knows what reason, and who knows, maybe we end up like Greece. And having liquidity is better than knowing that the bank won't let you pull the money out. So I like gold. I think they all can serve a purpose justfully in a portfolio done correctly. Thoughts on Telus? Telus is one of these stocks that I buy that just flies under my radar, but does so well. It's my favorite. It's my favorite telecom company of all time. It gives me healthcare exposure to telehealth. They do security, and I mean, look at them. They hit $29. They're at what, all-time highs after just diluting. By the way, I got reamed out because I bought Telus right after their dilution period and the stock dropped, and people are like, "Oh, this terrible company." They dilute. It's like, yeah, but companies have two ways to raise capital, right? It's either debt dilutes us, making it harder for the stock to go up, but what are they using that money for? And Telus they did like a $1.3 billion dilution into 5G to basically upgrade their systems. And I mean, does it look like they did a bad job? I mean, their stock hit all-time highs this week. It's the PE is a little high on it, but my God, it's my favorite telecom company of all time. Allocation, stocks versus real estate percentage wise. My problem with real estate is people always over leverage into it. It's usually the largest investment anybody makes. Um, I don't think it's wise personally. I don't think it's worked out well, sure. But I mean, let's say today you buy in Canada here an average $800,000 home. You got to put a 20% down. You got to come up with like 150 grand up front. And then you're stuck leveraging a huge amount of money. I mean, you're talking like, 650, $700,000 in leverage. And let's say interest rates do go up. Let's say the real estate market does cool off, and real estate can come down in price. I know it's hard to believe, folks, but real estate can come down in price. Long term, I'm bullish on real estate, sure. But in short term, to allocate that much money when you probably don't even have that kind of capital backed up in your portfolio, it's scary. It's a little off-putting to me because, like, if I was going to buy real estate and leverage that much, I'd hope to God that I still have like a few $100,000 at least in the bank. So that way you got some kind of different exposure, right? So percentage allocation, it comes down to how much you're buying the real estate for. Because unfortunately in Canada, you're probably going to have to spend all the money you have to get that real estate, right? So, but yeah, it's interesting times we live in, isn't it? I mean, the market never ceases to amaze me at just the kind of assets that you can invest in that'll give you crazy, crazy returns. Honestly, the best investment you'll ever make, though, I know we talk a lot about stocks and that stuff, but is business. I think people really underestimate the value of starting side hustles in business. I talked about this a lot on my other stream. When it comes to corporate tax rate, understanding write downs, understanding, kind of these semi legal loopholes that I don't know how they exist, but they do. Because it comes back to my example of buying a car. If you want to buy a Lambo for 100 grand, are you an idiot? Are you buying it with your own income? That's dumb. Are you buying a Mercedes with your own income at your salary job? That's probably not the best idea because you have to pay tax on that income, right? So if you make 100 grand, the government takes 38% of that. You're losing $40,000. Then you go buy a friggin' car that costs 60 grand plus tax. So now not only did you have to make so much extra money just to pay the tax on that money, to pay more tax when you buy the vehicle. Whereas in a business, you don't pay any income tax at the 3% corporate tax rate. You buy the car as a write down, and like, it's just, you end up saving like 30 grand. Like, it's just so dumb to me that people don't understand that. And anybody can do it. Any idiot can do it. I swear to God, you don't have to be making $100,000 to take advantage of tax write downs. You literally, all you do, you have a full-time job and you say, hey, I'm starting Miss Molly's Cupcakes. and Miss Molly's Cupcakes needs cars. And right now we're not profitable, but we need equipment. So I'm going to use my income and I'm going to write it down against my business. And then you can get all that tax money back from your job that you've been shoveling into this business. Like the amount of tax advantages you get just understanding like side hustles is astronomical to me. I mean, I can't get over how much money I'm going to make this year. It's probably going to be the most money I've ever made in my life. Why is Planet 13 still low after great revs? First of all, thanks. You're like the first person to ever tip me here, so I appreciate that. So I'll definitely answer your question. Why is Planet 13 still low after great revenues? Let me just take a look. So the MJ market has been getting shit tanked right now, right? And that's because it's been a nightmare. It's why I don't want exposure to it through something like an Altria group. But with Planet 13, you're buying a different version of the MJ market because you're not buying into the producers or growers, you're buying into the retail side of it. And I love Planet 13 for this reason, because if people can get a foothold in markets like Vegas, Florida, whatever, and they can prove that that market is capable to them, then the cash flow generation is going to be absurd because they don't have the volatility risk of not knowing if people even want to buy their product. And that's the problem with Canopy, right? That's the problem with Aurora. That's the problem with Kronos and all these companies is nobody wants to buy their product. It's too overserved of a market, and you can go anywhere and get this stuff. I mean, grandma can grow the weed in her backyard. I mean, this isn't like patented technology, right? So I remember mine. What was it called? MedMen. Actually, let's take a look at MedMen, and then I'm going to come back and I'll answer your question about Planet 13 here, because is that even still a stock? When was the last time that was even mentioned as a stock? Yeah, it's like a 30-cent stock today. Oh my God, they just got. Oh, that makes me cringe inside when you look at that stock chart. Jesus. Yeah, MedMen was in that same kind of field, and I was more intrigued by that. But let me take a look at Planet 13 and just take a look at some of their finances here real quick. Honestly, man, it's just secular, right? Like a lot of people don't want exposure to this market right now because it is such a horrifying disaster. But if you can find a little niche corner in the wall, like I think Scott's Miracle Grow is a great buy at this price, and that is an incredible way of. It's like selling picks to the miners in the gold rush. No guarantee they're going to find gold, but they're sure as hell going to need a pick. Same with dirt, baby. All these growers certainly need dirt. Whether they find gold growing out of that dirt or not, they're still paying for it. And I know Jeremy from Financial Education is a huge proponent of Planet 13. Why is their total revenue projection is a little down for 2021? I'm curious to why that is. And you're saying they beat earnings, so I wouldn't be surprised if they beat the expectations they have for this year of what, 77 million. Oh my God, their gross margins are incredible. Their profit margins are. How do they make this much off retail? Jesus, like not even Target makes this kind of money. How do they make so much? It's a good question. For those of you that are, I mean, in 2020, for example, they did 70 million in revenue, 35 million in cost of revenue, and they managed to bank 35 million in gross profit. So I mean, that's what an operating margin of damn near 40%, 45%. Yeah, Planet 13 is an interesting one if you understand the retail side of it, for sure. So yeah, that comes down to your I don't know, if you understand the company well enough, man. It's definitely intriguing for sure. But that's the kind of markets that I'd look at. Look at retail and look at the people selling the picks to the miners, because at the end of the day, it just comes down to branding, right? Where are the buyers going to? And if in Vegas they're like, hey, Planet 13 is the space to go. But again, Jeremy even said too, right? Like that he's been seeing that it's been slowing down, that business is kind of petered off when he went there, that on a Saturday or something, and there was nobody in the parking lot. So I don't know. It's kind of one of these nuanced things where you're taking on that kind of risk. Your thoughts on Cloud MD, telehealth? Share telehealth is huge. Telehealth is going to be the future. My doctor, I missed my doctor meeting on Friday. Health, man. Do you keep care of your health? I try and keep care of my health, and then I fall apart and I try and make meetings with the doctor, and I have to do it on the telehealth stupid phone service, and I miss it. I miss it. And my doctor's probably pissed at me. She went on vacation and I set up a thing when she got back, and I missed the phone call. Telehealth is going to be huge. That's why I like Telus, because Telus is pushing telehealth in Canada a lot. There's so many companies getting into it though. So I am curious to see like Kathy Wood's position. I mean, Cloud MD's big. The Well thoughts on Well is huge. Actually, how big is Well? That was another sponsor of ours too. Like Well was a huge one. Actually, that was like $1 billion company when we were doing Well Health Technologies, right? That was a massive conglomerate when they sponsored us, and it looks like they're doing good. Actually, let's take a look here real quick. How are they doing? Yeah, so for the last year, yeah, they're doing good actually. 1.5 billion for Well Health Technologies. It's been flatlining roughly. Honestly, I love healthcare so much that I think it's going to be one of the other underrated sectors. I mean, a lot of the Pfizer's, your Modernas of the world have been taking off a lot, but yeah, I don't know what it is with healthcare, man. A lot of the healthcare plays have been flatlining or trading down realistically, and I don't know why. One of my favorite stocks right now is Medical Properties Trust. They're globally diversified real estate, triple net lease hospitals, and their PE ratio is phenomenal. The company, their structured leases go out till 2030, and they have inflation baked into their leases. So basically, every year they guarantee they can raise the rents. So it's just like, and they don't have to manage the properties. Triple net lease, baby, the best real estate you'll ever own. You just the friggin' tenant deals with everything. They deal with the repairs, the property fix ups, all that crap. What a phenomenal company. So I mean, I love the healthcare sector right now, especially when you're looking into Well Health, Cloud MD, the stuff that Kathy Wood has been buying. I just, come on, guys. I mean, why does no one care about healthcare? We're still in a pandemic, for Christ's sakes, and it's just so underrated. But yeah, so on that note, folks, we're 40 minutes deep here. I appreciate you all coming out. It's been a fun conversation for sure. I'm going to try and make some content coming up soon because I'm going to have a nightmare amount of work. I just signed it, hopefully about to sign on the biggest deal I've ever signed on. And I want to do a good job for these folks. So that'll be an interesting one coming up. But I also may have a part-time job now. Company wants me to interview 15 CEOs a week. The money's okay. It's like a part-time, full-time income. So I kind of said, let's try it. If it works, it works. If it doesn't, it doesn't. I feel like it's going to hinder everything I'm doing right now. So I'm kind of concerned by it. So that's something that's happening. I got all these contracts privately we're working on. And then on top of that, I have a team of people that are hopefully going to be building our crypto mining rigs, which I might make a whole separate channel for because it's something I've never been into, and I would have never considered it, but we have a team of people that are like highly integrated into the technology spaces. They run computer stores, people that actually run crypto mines, and they're like, hey, you want to build this? We do it at cost, and it's passive income. So I was like, well, I dumped 5 crypto. It's a debatable thing, right? But it's killing me, right? So all this work is piling up. So I'm going to try and find a way to balance it for you guys and keep making some hopefully entertaining content. It's been a wild week, hasn't it? Wild, wild week. Anyways, stay cool, stay awesome, folks, and I'll catch you in the next one. Peace.